Hey everybody, DayTraderRockStar here, and this is an updated video on the copy trader project that we're doing. Also, I want to do an update on some other things on the Zello alerts and the RockBot. So 3 things I just want to touch base on because we started off Monday today. Mondays are always like the day after the weekend, and I try to get everyone set up who's joined the site over the weekend. If I'm away from the weekend, I sometimes don't get all the stuff that I need to get over the weekend. So a lot of the stuff I take care of Monday morning. That combined with a lot of the market activity, makes it a very hectic day. And then starting Tuesday, Wednesday, Thursday, Friday, things start to kind of fall into place. So that's why I'm doing tonight. The first thing is I had a lot of requests with the replicant and the copy trader. I am doing those tonight. By tomorrow morning, everyone should be logged into the copy trader. If you're a lifetime member and you sent me your replicant ID, you will be logged in tomorrow. Now, remember, when I started this project, I knew it was going to be a big workload for me because, there is so much that I do on the show every day. And to, do the copy trading and making sure everyone's logged in properly and I'm taking the proper trades because this is different. This is a little bit more pressure on myself. And I have a criteria that I want to take when I take the copy trade. So let's get that out of the way first. All right. I trade a couple different things. I have my own IB account. I have an Apex account, and I have a Bullinox account. The copy trade is hooked up to the Bullinox account, and I trade that along with my Apex account and the other accounts. Plus, we're doing stock trading and anything else, and market coverage with news, everything, questions, education, and everything during the day from 8 o'clock until 4 o'clock. So there's a lot going on. To kind of protect myself from being overwhelmed, I put myself, I gave myself a strict criteria for the copy trades. The copy trades will have to be a certain setup. This is my highest probability setup. It's called a quad divergence. All right. That was the point of the copy trading, only taking the best setup. Now, originally I was going to run it off the RockBot, but the RockBot, again, understanding market conditions, market trends and stuff. If the market is going down, I tend not to go long. I just don't want to trade the RockBot script and try to, capture those little bounces because I'm not setting the parameters. I'm not resetting parameters on the RockBot. And what I mean by that, our RockBot is an automated script that I'm running on the ES or MES on the RockBot channel. And it runs off the 300 tick, and it's also identifies the quad rotation, but it's working on the 300 tick, which has been an excellent chart to use in a very upward trending market. It's been dynamite. In a downward trending market, like when the market's down 400 points, it's not going to be as effective. So we want to kind of back off of that. This is not a plug and play, turn it on, and go to work and come back, and you have to manage these things. And I stress that that's so important to understand that the parameters make the bot work. Meaning, if you have a great market, a great volatile market that's kind of a neutral base, and you get these nice moves up, nice moves down, and you're not really trending, great. Everything's going to work. If you have an upward trending market, great, because the bot is set for buy signals. On a downward trending market or a severe selling off of there, we really don't want to turn that bot on and really use it to kind of pinpoint the moves. I would rather just pick the divergences or some of the other HPS zones like the quad rotation and stuff, and not use the tick chart. So the question came in today from I think in his service asking me, what am I trading off, the 300 tick or the 1 minute time frame? He was confused. Well, like I said, the RockBot is set up on the 300 tick, and it has been set up because the market has been very, very strong. But I don't trade off of that. I let that set the signals, and then I'll talk about the signals and say, no, markets are weak here. Do not take any signals on the bot, or there's news. This is an aggressive selling market, so you might get little bounces, but the parameters are not set. When I say parameters, when a bot gets into a position, You have a target for your first profit. You have a target for your second profit. You have a defined stop and a defined trailing stop. So lots of times our first target might be 6 ticks or 1.5 points, comes up to 8 ticks or 2 points. And when you have a downward trending market, you might not get those parameters. You might get a bounce, which we do get bounces. But you have to understand that when we have that, and I set a rule on the 300 tick, if we're trading underneath the 200 period moving average, that we use the 9-3 rotation to get out. So just remember that. That is so important. It's so important not to think that you could just turn on the RockBot and it's going to work great in every situation. It's, first of all, it's a buy side a script, and it works great in a very bullish market. That's when I would be using it. It works excellent there. Whenever you counter trend a counter trend trading, going against the trend, you're going to have to apply other techniques. Taking off profits faster, understanding weakness, understanding seeing bear flags. If you have a bear flag, you can take things off, and that's what we did. We noticed today there was a lot of bounces, but then bear flag, bounce, that's what we're always looking for. So the 300 tick is going to stay remaining on the RockBot. I want to still, call those trades if they do set up. You get to watch them take the trades, but please do not run this. I told everyone, please run the RockBot and use it as an indicator, meaning let it run on a separate chart, maybe a sim chart, and then when it takes the position, or let it take your position, but manage it. Manage it when it hits the first target. Move your stop up to break even. See, the parameters are not set like that on the RockBot. Now, I can set up like that, but then, again, I will be not giving the RockBot its full opportunities to take much bigger profits, and capture the second zones and catching the trailing stops and letting everything run. So it would be, sometimes we consider that like a scalping mode versus a more of a loose stop and a wider trailing stop that gives it more room to run, which you should do if you're trading in the direction that you want to be trading. But don't use that same technique when the market's going against you. Bot's still going to give you great setups, but you're going to get bounces and they're going to roll over. And if you do not hit your first target or your second target, you could roll over and still get a losing trade because depending on how many contracts you have, you take a couple off and then you have 3 more on and it comes down and takes your stop out. That's not a good thing. So whenever you hit that first profit in the downtrending market or trading under the 200, either move your stop up to break even or take the trade off on your first rotation on the 9-3, and that's on the 300 tick chart. Simple rule. It's going to save you a lot of problems. All right. Got to do that. You gotta manage your trades. All right. Now let's zoom in here a second. I want to go over the copy trades. Now I'm going to start the copy trading tomorrow. I want to dedicate tomorrow to the copy trading. All right, we're going to dedicate it. That means that I'm going to be really focused on it. We're going to be just focused on the divergences. Now, I might see bear side signals that are classic bear flags, like it is right here. There's kind of a classic bear flag that we're looking at that moves up to the 20-period moving average and then drops off. I mean, that was textbook when you have an embedded stochastic in the first rotation, right up against the 20. That's a textbook bear flag, and it was easy enough to see that today, and it rolled over perfectly. And then we got what we call a quad rotation, which is something that we use all 4 stochastic bands to identify. And I want to just kind of show you that for a second. Let me zoom out here. Zoom out. Well, and then we're going to move over here. Let me clean up this chart a little. The other rule I like to say is when we have news like any type of move, we have CPI, PPI, jobs report, anything that comes out in the morning, usually the 8:30 to 9 o'clock, 9:30, 10 o'clock. That whole morning session is filled with news items, economic news. And that's something we have to pay attention to, because that will move the market aggressively in one direction based off. And it's just it's a crapshoot. So you cannot try to trade that. You have to let the market get into a rhythm. Once you get into a rhythm, then you're able to pick this market apart very easily. I'm telling you, it does become pretty easy if you get out of the way of the chop and the aggressive nature of the algorithms when they hit news. Now, again, we're only looking for a certain amount of situations, and we're talking about copy trading now. So tomorrow, and we were going through this, this is what we're going to do our copy trading on. All right. Now I go through this all the time. I just put out a great video on Sunday night, and I hope you've got to watch it. And if you haven't, go back into your Trader Alert box, go back into your email, and please watch it. It has great information on the divergences and what we should do and where you should place your top, stop, and the different setups and what everything means. It's really just a good introductory video. I try to make all these videos the same because all the setups are the same. Now, I did pretty good today, considering the market was down 400 points. I didn't trade a lot, but I mean, the trades we did take were pretty good. Let's just kind of go through the market right now. As you can see, the market, I want to try to make these numbers a little bit bigger for you so you can read them a little bit better. All right, let me do that right now. All right, so then the market came down here. We actually set up with a first quad of the day, 10:45, 10:40. And it was a sneaky little candle right here. We called this divergence. I called it out because it was a very sneaky divergence, the 10:40 to 10:45 divergence right here. Now, that happened really fast, and it was very hard to see. It wasn't our classic divergence, but it was a divergence in a way that you take out the lows, but you never see the dip here. And that dip was higher than the previous low, so that made it really nice divergence. It's a tough one to grab. Took the trade, got a couple points out of it, but it ended up being the best setup of the day as the market rallied from that point on. All right, so market actually moved up, and it continued to move up until we kind of got into some bullish flags here. And how do we know this is the bull flag? And this is not, again, this will be something I take on my regular accounts, but I will not do a copy trade on the flags here unless there's a divergence. So you start to see strength here. And once you start to see strength on your 60-10 and you get that rotation back down here and it closes back over the 20, it's important to close over the 20. Right when we close over the 20, that's valid. Now, it kind of closed on the 20 until here. And right when you got close on the, when you close over that 20, that's when that trade becomes valid. And actually, you could barely see it here. And that's why it was kind of tough, because there's, and I refer back to last night's video when we talk about different type of divergences. We have our pure divergence, where we have a classic lower low and a higher low on the stochastics, lower low on the price, higher low on the stochastics. That's a classic pure divergence. Then you have your double bottom divergence, where you have the same price level but a higher low on the stochastics. And then you have your relative divergence, which the price comes down very close to the level, of the lows, but you have a drastic change in the in the stochastic, meaning a much higher rotation. And the same thing on the sell side, because we did notice that there was a little sell side divergence here, kind of a double top sell side divergence. So there's a couple here, and you see how fast these things move, especially if the market is moving. You're not going to get much of a pullback. So this sell side divergence, if you decide to take that, you're not going to have much time to get out of that, before it starts moving back up. And so we have to be very, careful on watching this. And you're seeing that this pulled back, right? We pulled back to the 20, and this is holding above the 80, 85 level. That's extremely, and we close back above the 20 here. We close right on the 20 right there. We close back above the 20. That is what we call a bull flag. So once we have that bull flag, this is a textbook bull flag. We got the oversold on the 9-3, the embedded on the 60-10, and it's off to the races. All right. We continue to follow that market up. And what do we see here? Kind of another little pullback, a fast rotation. It got down to about 50. This is still embedded. Look at how high this is. This is very strong. George Lane said, once you get really extremely strong on your stochastics, really above 99, 100, that's an extreme bullish signal or bearish signal if we're down near 5 or 0. And that is something that you have to just continue to go along with. So here we had the rotation, and you have the embedded stochastic. It didn't really get down to a 2020 bull flag, but you could just feel the strength in this market. And that candle came all the way back down here quickly and then reversed. So we had a couple nice bullish flags. Whenever we have a pullback in a bullish trend, we just kind of measure this stuff out and we wait for it. And what we're looking for here is this right here. So this is our textbook setup. This is what I want to take on the Zello alerts, and I want to take on the copy trades. All right, now this is today's Zello alert. Let me see if I can bring that up for you. Now, like I said, I'm trying really hard to get into a groove on doing this and managing that. I just ask you to be patient with me. This will all come together. You know, I still struggle with trying to cover stocks, trying to answer the chat room, and trying to, you know, but tomorrow we're going to be dedicated on this. So we're going to call that tomorrow's Copy Trading Tuesday. Copy Trading Tuesday is going to be tomorrow. And we'll see if we can continue just being focused on that. All right, so this was that was a really nice classical divergence. That one we will definitely be taking tomorrow if we get another one like that. Again, on the Zillow and on the other one. Let's take a look at what that says.
Good afternoon, traders. We did have a divergence here right after 1 o'clock.
1 o'clock right here.
I would put the stop in at 49, underneath 49.62. This is a little pullback, but it is I wish I gave you a faster update on this because it was kind of a sketchy divergence, but it is setting up as a divergence right now and moving.
And then the next alert came out.
Taking profits off of that last divergence here.
And we took the...
Here we're at resistance here, 49.71 here, 49.71.
So as you can see, it went up to 49.71. We took profits on that, and it actually pulled back. Let's see here. Let's continue on. There we go. Market pulled back a little. Again, we have to remember we have to wait for our setups, and the setups will come. Again, from 1 o'clock to 2 o'clock, it was pretty much choppy. You just don't want to get involved in this. This is kind of a choppy session. You just want to be careful of not over trading. And over trading is taking any trade that doesn't set up, you know, in the setups that we're looking at that qualify for on the criteria. Market had a little flag here popped. Started to see a little divergence here on the sell side divergence, but the market was very strong. This one closed. It was a little divergence here, but it didn't close under the 80, which would be, and it's only a 4-degree angle. Remember, we'd like to see those divergences at a more of an angle of about a 10-degree angle. And that would kind of break us down underneath the 80 line, which would be better. But either way, the divergence did play out really well as one of, you know, and then the market sold off pretty good into 315, bounced back up. And this was, again, another little slight divergence. You can see it. You can see this here, right? You can see it's about an 8-degree, maybe a 7-degree angle between this high and that lower high. And a nice little pullback. And then you had a nice, things got really choppy here. You had a nice little divergence there, and then a pop, and then a drop. And right, and again, at 3:30 to 4 o'clock with the Berta algo and stuff, you just really want to be safe on that. So again, the criteria for the copy trading going forward, divergences. Not around, you know, trying not to get involved in news, trying not to trade too much after 3:30. And that's basically what's going to happen tomorrow. So again, be ready for those. We're going to give it a shot. Let's just actually follow the market here and see what happened for the rest of the evening here. Now, I'm late here getting the stuff. I am working on everyone's accounts right now, making sure everything's set up. So I wanted to get this video out just to kind of update everyone on that. Futures opened up here at 6 o'clock and kind of just drifted. And look at what the overnight trade, you actually had a coil here. Look at this coil. This is a great example of a coiled quad. This is what we call a coiled quad, meaning you have a coil on your 9-3, a series of lower highs on this. Just what the coil represents is just tightening of this pattern. Lower high, lower high, lower high, and then it explodes out. And while that's coiled up, we're waiting for the other stochastics to kind of get down to that same. And what this is doing is really waiting. We got oversold there, and then finally here where everything is lined up with the coil. Now, we zoom out here, you can see how well that worked. That coil really worked good. I mean, I'm looking at it for the first time with you, and I'm looking back at that, and that was a really nice coil. And that's where we are right now. It's coming up on 10 o'clock exactly. We actually had a little double top divergence right here. And a nice little pullback. Now you could take the, I wouldn't mind taking the ES trades on this, after hours, because, you can start to identify this. Maybe you get it at 65. It goes down to 64. You're getting 2 to 4 ticks, and maybe even more, considering. But that's not bad if you have a few contracts on, and you're not going to affect anything with your evaluation account because you're not putting real trades on the in the market there. So it's not going to even register, and you're not going to affect anything. So you do get that little divergence. That's when you want to trade that. Nothing else. I'm telling you, nothing else. We have to be super disciplined. Only the most disciplined trades, only the right setups, and that's how we're going to get to where we want to. That's how we're going to get our goals. Because as you can see, we pretty much just went over the setups, and every setup that we identified here as the proper setup, be it a coil, be it a quad, or be it a divergence, really did give us a nice little move. Again, the 350, I wouldn't really trade that, and I'd be very careful around the 930 time frame. So that's the rules going forward. I'm going to get back on making sure, finishing the emails right now. So you're probably going to get an email later in the evening. If you're waiting for one, we'll be all set up for tomorrow, and I look forward to doing it. If you have any questions or anything or want to get involved, email me at ironaction@yahoo.com. All right. Thank you very much.